I do have a questions. I do have a question for you. So yeah, I mean, I think we all like kind of have some like, took some basic economics courses during our first, second year, and we do understand a little bit about like some supply shocks and demand shocks, right? The one that moved the graph to the right, to the left, right? And here we're seeing a lot of like real life examples here, and if you can go back to your slide a little bit, if that's
Yeah.
possible. So you have like a 40 year gap, right? You did a research that lasts for a long time, and the graphs really resembles a typical real estate cycle, right? When the supplies goes up, right? And then, yes, somewhere around there. Yes, this one, right? And we're seeing a lot of changes during the later period of the graph, right? We're seeing a more fluctuations towards more recent year. Uh, why do you think our cycle is getting shorter now? I think you mentioned like a typical housing cycle is around like 5 years, right? And you think cycles will become shorter and shorter, or it's gonna be harder to tell?
That is a really good question, and it kind of applies to the wider economy as well. So like business cycles, like our business cycles getting longer, right? So if you look back at this, early '80s we had a very serious recession. Early '90s we had a recession, at least in Canada. It didn't really affect BC as much. Then we had a financial crisis driven recession in 2008, 2009, and we had a pandemic driven recession in 2020. Um, the volatility though is kind of fascinating, and it's one that we bring up in the last 5 years where we have these boom bust sort of periods. Some of that is due to policy, and some of it's due to the business cycle. So in the past 5 years, though, it's all basically due to policy. We had a kind of a probably an overheated market in 2016 due to a lot of different factors, which was sort of diagnosed as purely a foreign investment driven market. That foreign buyers tax really only affected the market for about 6 to 8 months. And then in 2017, if we kind of think about affordability, um, home prices, if we look at levels of home prices, and actually, it'll be easier if I share that because it's pretty interesting. Let me stop sharing this. Not this. So you can see my Haver thing here. So if we look at, say, the HPI composite for Greater Vancouver, everyone can see this? Yeah? No? If you're
Yeah.
nodding, I can't see you. So I need someone to say something. Awesome. Okay. So you can see foreign buyers tax was right here, August 2016, and you can see what happened to prices. Not much, small impact, and then prices in 20 by about 2017, kind of spring 2018, went up another $100,000. So post foreign buyers tax, this is the foreign buyers tax right here, and then prices went up another $100,000. So when people talk about the effectiveness of the foreign buyers tax, does it look like it really had much of an impact? Not really, right? Especially on affordability, when you talk about the level of home prices, it really didn't affect the level at all. Then we had B20, which had a huge impact on the housing market because, again, it affects 60% of mortgages. If you kind of went to bed on New Year's Eve 2017, you woke up New Year's Day 2018, and the amount of house you could buy fell by 25% because your interest rate effectively went up 200 basis points. That has a huge impact on the market. The interest rate channel is extraordinarily powerful on asset prices and on the housing market. We're seeing that now as well. It doesn't show up in our model as much as I think it should in this type of model, but When we have interest rates as low as they are, it has an enormous impact. And right now, we're talking about a rate where you can essentially borrow for free for the next 5 years when we back out inflation, right? So for in real terms, you're borrowing for free for 5 years. No surprise that has a huge impact on asset prices, home prices being, an asset. So I rambled. Did that answer a question? I don't remember what the original question was.
Yeah, that's actually
Oh, well,
explains a
yeah,
lot.
right, about policy, right? So we all those
Yeah.
shocks are due to policy. So foreign buyers tax, then we had B20 where you saw about a 2-year impact. The really important thing though is that we have this all the time where this demand side policy that kind of buys time. So whether it's restrictions on CMHC regulations or some other kind of demand side policy measure, it's short term. So we have these impacts. We saw foreign buyers tax, so B20 and speculation tax, where you have an initial kind of the market absorbs the shock, and then by kind of 12 to 18 months later, we're right back where we were. So now we're into 2020. We're in markets that are once again undersupplied, and we're probably in many markets at lower levels of supply than we've ever seen. And so we're right back to accelerating prices because over that time we haven't done anything on the supply side to fix anything, right? So demand comes back, there's no supply. For example, in a market like Chilliwack, 100,000 people, so decent sized city, and there last month there were 500 total listings, right? So that's really low. That's a historically low level. So we're a record low of listings in Chilliwack. We're a record low level of listings on Vancouver Island. We're a record low level of listings in the Okanagan, right? And all of that means there's going to be a lot of price pressure, especially because in the pandemic, people want space, and so we're seeing more and more people going, either baby boomers accelerating their retirement plans. They, maybe plan to move to the island in 5 years. They're doing it now instead, kind of seeking a refuge from the pandemic or taking advantage of low rates or both. So we're seeing all of this demand outside of Metro Vancouver. If we look at sales trends right now, Vancouver's doing really well. But I think in February, sales in the Real Estate Board of Greater Vancouver, which isn't exactly Metro Vancouver, but that's another issue altogether. Sales in Greater Vancouver were up about 70% year over year in February. They doubled in the Fraser Valley. So in places like Surrey and Langley, they doubled, and prices went up 20% for single detached. And in places like Chilliwack or the Okanagan or Vancouver Island, I'm expecting they're also doubled in February. I haven't seen the data yet. So outside of major areas is where we're seeing most of the demand. So we're on a record pace for sales this year. And a lot of that is due to areas outside of sort of Vancouver proper, which is a lot different than what we saw in 2016, where a lot of the demand was driven by especially single attached homes in Vancouver proper.
Wow. Those are some crazy numbers. You mentioned the word double quite a few times. So
yeah. Well, and that's comparing to pre-pandemic levels of sales.
yeah.
So that's February of 2020. Once we get to April, the numbers are going to get crazy because it's going to be like sales are up 300% year over year because April was like the lowest ever. But yeah.
Nice. So we do have a question from Habib. You can ask right now.
Hi, thank you. That was a great presentation. And I mean, I like your point on the supply side because we see the media kind of being obsessed with demand side policies. And so I just wanted to get your opinion on perhaps like rezoning single family homes outside of Metro Vancouver and further towards maybe Langley and Abbotsford and all, to maybe allow for higher density condos and to kind of increase supply. So I just want to know what your take on that was.
Yeah, I think if you talk to most economists and most people that look at the Vancouver housing market, I think the way the city of Vancouver is zoned makes no sense. We basically zone it for millionaires. It's no surprise that a lot of areas of Vancouver are really expensive because we've zoned them to be really expensive. You can't build anything except mansions on them, right? If it's sort of zoned to be a single attached home with this much space and whatever, you can't build anything on that. It's like you're not allowed to build a duplex even. You can't build a small, you can't build row houses. Like there's a lot of those areas where it makes sense to just build townhouses and fill out the missing middle where we have a lot of younger families, especially if you look at the age cohort of a lot of millennials now is I kind of think of millennials as being kids, but a lot of them are in their early 30s and entering sort of their prime earning years and their sort of family household forming years. And there's not a lot of places for them to go because there's not a lot of housing stock for them, right? Which is why you see so much demand outside of Vancouver, because a lot of the younger cohort need somewhere to go. I don't know how we get around that without massively, rezoning a lot of Vancouver. If you look at Surrey, Surrey's enormous, and they build a lot. And in Richmond as well. Like if you drive through Richmond and there's cranes everywhere because or in Burnaby. I mean, I for a while lived in North Burnaby and that whole area around. What's that mall? Not Metrotown, but does anyone live in Burnaby? It's on a SkyTrain stop now. It used to be
Brentwood.
What's that?
Brentwood.
Yes, thank you. Brentwood. Brentwood is completely transformed. Now, if you go to Brentwood and there's like all these high rises and there's the mall looks crazy, and there's restaurants. When I lived in North Burnaby, there was a bus stop right there, and there was a subway across the street, and that was it. That was it. Like there was nothing there, and now it's totally transformed, and it makes sense. It's the way you're supposed to actually design cities. It's on a transit route. There's high density housing around the transit, right? The way things are supposed to be planned. And that's a total transformation. And, we don't see that kind of thinking in a lot of other parts of Vancouver. 15 years ago, they tried to put transit through certain neighborhoods and they were told, no, you have to divert it completely. Like the Canada line had to be totally diverted because the neighborhoods didn't want higher density or transit in what was considered to be sort of posh neighborhoods. So a lot of times you're fighting with the sort of existing homeowners in a lot of those places, and they're really they're pretty ferocious in protecting sort of their neighborhoods, and that's who a lot of time the politicians listen to, and so we just don't get the type of density that we need.
I feel like politics kind of plays a really big role in these developments because they have to, protect their votes, their supports, and they have to take into consideration in many different areas in terms of like developing the city. So I kind of understand that.
Yeah, I mean markets aren't perfect in reality. So the things that would really make sense in a textbook, you run into a lot of frictions when you try and apply those things in real life because there's real life people who don't always act rationally.
Okay. Jonathan, would you like to ask a question? Sorry, we can't hear you. I might need to. Hello, can you try again?
Yeah, can you hear me?
Nice,
Yep.
Nice and clear. Yeah.
Zoom problems, I love it. Anyways.
I had that yesterday at the Economic Forecast Council meeting, and I was muted when I started to speak. So it happens to everyone.
Oh yeah, okay. So yeah, thank you for the presentation. It was interesting, seeing the historical trends. But my question kind of pertains to what's going to happen next. If you can maybe provide some insight on that, because compared to like the 2008 recession, the impacts of March and COVID have arguably been a little bit bigger. And earlier on in 2020, everyone was saying that we would fall into this Great Depression, but now everything's higher than it was even before the pandemic started. Do you kind of think we're out of the woods yet, or what do you think is going to happen?
Yeah, so we wrote a paper about this in September. So you can find it on our website if you want to read about it, sort of looking at how unusual this recession was. So normally, maybe I'll show that too. Do you guys mind if I just show slides? It's just easier. Economists always want to speak with pictures, so it's a little easier if I can just show you. Let me find it first, and then I'll share it. But yeah, this was a really unusual recession. Normally, we would expect when we have a huge shock to the economy, a big negative shock, that sales would fall and supply would rise, right? That's the way things are normally supposed to go. This time around, we saw the exact opposite for some reasons. Let me find. I've got good pictures for this, so might as well use them. Normally, when I do presentations, there's not a ton of dead air where I go hunt for slides, but again, informal. I usually don't wear a sweater either. What was that one called? Here we go. Yeah, okay. All right, I'm assuming you are seeing the right thing. So we went back and looked at past recessions and how they affected home sales. So looking at 81, 82, 90 to 92, the financial crisis, 2008, 2009. And then we did a bunch of modeling work to kind of figure out what we thought would happen. So our thinking at the start of the pandemic was that we would see a pretty big decline in sales, which is what we saw. And then we kind of returned to a pre-pandemic baseline around now, essentially, right? That's obviously not what happened. And then on the listing side, we were expecting, as what usually happens, listings so that total inventory would really spike a lot higher. That happened in the 2008, 2009 recession. And our models sort of tell us that's what should happen this time around. We'd also run a scenario where listings would fall because of social distancing, but then normal kind of recession dynamics would take over and listings would rise. And that would sort of lead to this sort of impact on home prices where we thought home prices would initially decline and then kind of come back to baseline again around the early part of 2021. That's normally what we saw in past recessions. That is not what happened though. Instead, what we saw is a huge increase in sales, which I have in a different slideshow, kind of comparing all of those charts to what actually happened. So let's see if I have it. Yeah. So you can see like what actually happened. This doesn't have the whole year, but you can see how strong the recovery was compared to what we were expecting and compared to past recessions. That's on the sales side. Listings, you can see, had initially fallen and basically were flat for the rest of the year. And then prices basically dipped a little bit and then came right back to baseline and then went a lot higher. So the question is, what do we see happening now, given how unusual the previous sort of period was? It's a lot of really, a lot of what was driving the impact on the housing market, what we saw in the housing market, where sales were a lot higher because we had a really swift and very large policy response, both from the sort of the federal government in supporting households, financially vulnerable households, kind of bridging them through the worst part of the crisis. And then the Bank of Canada, of course, lowering its overnight rate very quickly and then engaging in an enormous amount of quantitative easing to keep bond yields low, which keeps mortgage rates low. And so mortgage rates fell to record lows in the fall of this year. So those two things really supported housing. And then sort of the added really weird part of this recession is that high wage jobs have actually grown 6% since the pandemic. So if you're in an occupation where that tends to earn higher than average income, you haven't really felt this recession at all. So a lot of people are working differently. They're working from home more or something, but they haven't experienced a lot of job loss. Whereas sort of frontline service sector, what we call high touch industries, haven't recovered. So if you're in a kind of a lower wage earning job, a lot of frontline service sector, you've really felt this recession, but those aren't the types of jobs that support ownership housing. There are the types of jobs that support the rental market, which is why we've seen a lot more kind of impacts on rental demand and on rents, though not as bad here as we've seen in Toronto, where rents have fallen like 20%. So low interest rates, high wage ownership, high wage jobs have actually grown. All that really is supporting ownership housing. And then going forward, I think as vaccinations progress and we kind of get to a point where it looks like the pandemic is behind us, I think that's going to sort of unleash a lot more optimism in the economy, and sort of unleash a lot of pent up spending. So there's about, by some estimates, 150 to 200 billion dollars of excess savings in the Canadian economy right now. A lot of that just sitting in bank accounts, kind of waiting to be spent. A lot of that's going to find its way into the housing market. A lot of it already is finding its way into the housing market. Interest rates are going to be low for quite some time. Bank of Canada is committed to keeping rates low to 2023. 5-year fixed rates are probably going to rise a little bit in the next few weeks because 5-year bond yields have actually doubled in the past 11 days, from a really low level to about 1% or a little under 1%, but still pretty big, pretty fast increase in 5-year bond yields. So we might see a little bit of upward pressure on mortgage rates, but still they're going to remain at extremely low levels, probably under 2%. So low interest rates, a recovering economy. I think that means we're probably going to set a record for home sales in 2020. We're currently on a 125,000 sale pace for the province. The record is 112. So even coming off our current pace, we're still probably going to smash that 2016 record. What else? Supply is very low. We don't see supply coming back anytime soon, at least until the pandemic is over. And that means we're going to see a lot of upward pressure on prices. So I think we're going to see a record market this year, really all around the province, and some pretty strong price growth. It was a really long answer with like 2 different slideshows, so apologies.
This is what we need. We love listening to all these ideas from you, and I think it's not something that we can read on books. Like, that's not what we learned from class. So it's good to hear from you.
Great.
Yeah. We do have one more question here. Akash, would you like to ask?
So my question is like, what is investable at this moment in Vancouver real estate? And like, what do you think is not investable at the same time? Like, and how do you determine like what not to invest in?
I don't know. I mean, I don't think a lot about investing, since most of the housing market is driven by people who are looking for a primary residence to live in and raise families in and whatnot. So I think if you're kind of thinking about investing for sort of price appreciation, always look for areas with favorable demographics. You can't fight demographics, so areas with a younger population or even a baby boomer population, depending on where you're looking, but where there's a lot of population growth and no supply. So pretty simple, right? Like there's gonna be a lot of demand, not enough supply. So there's a lot of places right now that are really undersupplied. So and sort of this, it kind of depends on what you think about what's going to happen after the pandemic. So I've always sort of thought, like, how deep is the scar on the psyche of home buyers? Right now, we're seeing a ton of demand for single detached homes because people want space. So if you knew a pandemic was coming and you could sort of sort out all of the dynamics, and you knew people were gonna really want extra space, a year ago, you could have made a lot of money buying acreage in the Okanagan or single family homes in Vancouver Island that are now sort of up 20%, right? I forgot where I was going with that, but generally anywhere where there's low supply, and that's kind of everywhere right now, but also very strong demographics. So even think about a place like Surrey, which is going to be larger than the city of Vancouver in the next decade. A lot of people are going to have to be fit into Surrey, and it's a big place, but still that's a lot of sort of demographic pressure, right? So anywhere in the Fraser Valley, Chilliwack's another one, has absolutely no supply, and it's going to have a lot of demographic sort of demand, and a lot of just like people looking for space and affordability outside of Vancouver, but sort of close to Vancouver. So that's sort of like in general. And then there's like the Vancouver condo market that's got pretty beaten up, but is definitely going to come back once the pandemic is over. Once kind of all of you people need a place to live at some point. There used to be a lot of students living, either renting out apartments around Vancouver. So once kind of students come back and need a place to stay, I think the condo market's going to come back pretty strong as well. Especially as borders open with more international students, that's going to be a huge driver of the condo market coming back from, it's actually doing pretty well right now, but it's sort of the lagging behind some other parts of the market.
Yeah, I guess for everyone who's listening right now, condo is it's the way to go right now. Invest in a condo while it's low, because everyone is like they try to stay away from vertical living, right? They want to stay away from people. They don't want to share an elevator with their neighbors, right? And people just like kind of try to move away, right? Since you're working at home, why not choose a beach house to work at home, right? You're looking over the sea and do your stuff at work. But eventually I think as human beings, we're still trying to interact with each other, try to come back in an office scenario to be with your coworkers and stuff. So I feel like there will be always like a demand for downtown condos, right? Campuses near, like housing near campuses. It just like it makes sense to buy them now, and hopefully for the future it's just gonna shoot up high.
Well, it's also kind of the only game in town for a lot of people though. True. Too, right? Like we have to fit a lot of people into the Metro Vancouver area over the next 10 to 20 years.
Mm-hmm.
We're not building more single detached homes. The ones we have are kind of prohibitively expensive. So there's not really a lot else to buy besides condos. So eventually that's where all the demand is really going to be. It's also where a lot of supply is. Hopefully get something a little more balanced. But and on what my sort of completed my incomplete thought about the pandemic and how deep that scar is, I'm kind of curious on the single attached side and working from home. In the next kind of couple of years, are people going to still be demanding all of that space in sort of anticipation of, well, what if we have another pandemic in a couple of years, right? And so how affected are they by the current, like, sort of behaviorally by the current pandemic, and sort of thinking like, if this happens again, I want as much space as possible, and sort of buying sort of with that in mind. So that's going to be really interesting. I don't know how that's going to play out. I think I think it's probably going to be a bit of a hybrid, and same with on the condo side, and even working from home. I think it's going to be kind of a hybrid. I know in our own office we have discussions about, once the pandemic's over, how are we going to be working, right? And I don't know. Amazon's building a huge office downtown, and I'm guessing they want to fill it with people. So, I mean, I don't know how that's going to work. I think it's going to be a lot. My own feeling, I think it's going to be a lot closer. The way like office work is going to be a lot closer to the way it was than anything dramatically different. But I think there still will be more kind of work from home. But it'll be interesting if like people, bought a house in Kelowna, thinking they're going to work from home for the rest of their careers, and then they, 2022 rolls around and their boss wants them back in the office. So I don't know. It's going to be, there's a lot of really unsettled issues from the pandemic that are going to influence the housing market, but it's just really uncertain.
Okay, thank you. Well, actually, time flies when we're talking about real estate, and it's already 2:30. So maybe one last question.
Sure.
It's in the chat from Manav. So you can just let us know about your view. What do you think about REITs? Are they a good investment?
Yeah,
to start small.
That kind of ties into, I mean, like investing in like you're not like, going to buy a shopping mall and some office towers and have a portfolio of your own. I'm guessing you're talking about just buying like an ETF or investing in a REIT. You're not like putting together a REIT. You're just investing in one. Yeah. I don't know. That kind of goes to my previous point, right? Like a lot of REITs own things like shopping malls. and things like office towers. What are cap rates on office towers going to be going forward? Interest rates are really low, but like, are rents going to be really low? Are they going to have trouble leasing out all that space? So it's one of the, I think like REITs maybe that own a lot of high quality assets in like kind of high quality locations might do better, but you can see where like maybe ones that own kind of, you know, how there's like those like office parks in like Richmond or Surrey, like maybe like those types of offices aren't going to be as profitable or as lucrative as maybe they would be without the pandemic. So it's a real tough one because we don't know. Like, we don't know what the future of retail is going to be. We don't know what the future of office work is going to be, and that's where a lot of REITs make their money, is in owning space that, you know, provides them monthly lease payments. So it's a really good question. I don't know. It's tough. I mean, they generally pay a pretty high dividend, so that part's good. If you have a really high quality REIT that pays a solid dividend and it doesn't look like that cash flow is going to be disrupted by the pandemic too seriously, then, you know, fine. But if you're one that owns a bunch of movie theaters and shopping malls, then that's a little tougher.
Cool. So there you go.